If somebody took $200 out of your wallet on the street, you would call the police. You would remember it for years. It would become a story you told at the table. If somebody takes $18 out of your checking account every month for the next 15 years, that is more than $3,000, and there is no story. No police report. No moment where you noticed anything at all. That is the entire difference between a theft and a fee. It is not the amount, it is the speed. And the reason I am starting there is that everything in this video is invisible by design. There is no late notice, no penalty, no alarm. Just money leaving an account every month that never had to leave, from a person who would absolutely have said no if anybody had ever mentioned that no was available. Now, before I give you the 7, I need to give you something more useful than a list, because a list you cannot act on is just entertainment. There are 3 completely different kinds of wrong on this list, and knowing which kind you are looking at is the entire game. Use the wrong approach on the wrong category, and you will get nowhere and conclude that none of this works. The first kind is genuinely illegal. There are charges on this list that a business is not legally permitted to bill you for. With these, you are not asking a favor. You are pointing out that a law exists, and the correct approach is to name it out loud, because saying the right words changes the conversation immediately. The second kind is completely legal and entirely discretionary. Nobody is breaking any law charging you, and they will stop the moment you ask, because the fee is a policy, and policies have exceptions, and the exception is usually available to anybody who requests it. With these, arguing about fairness gets you nothing. Asking plainly gets you everything. The third kind is legal because you agreed to it, and you agreed to it without knowing. These are the ones that keep running in the background. Here the approach is neither legal argument nor polite request. It is an audit. You have to go find them because nobody is going to point at them for you. 3 categories. Name the law, ask plainly, or go find it. Get that right, and the rest of this video is simply which is which. My name is Kevin. I read the rules so you do not have to. Every week I go looking for the thing that quietly decides what happens to your money, and I bring it here before it costs you anything. If that sounds useful, subscribe and turn on the bell, because number 4 on this list has erased medical bills in the thousands for people who said one specific phrase, and almost nobody knows the phrase. Let me start with the smallest one because it is the most common, and it is the purest example of category 2. Number 1, the monthly maintenance fee on your checking account. Depending on the bank, that runs somewhere from about $5 to $25 a month. Call it $15 in the middle. That is $180 a year that you are paying an institution for the service of holding money that belongs to you. Now here is what almost nobody knows about that fee. It is one of the most negotiable charges in American consumer finance, and it disappears constantly for people who simply ask. Banks routinely waive it. They waive it when there is a recurring direct deposit landing in the account, which describes essentially everybody receiving a Social Security payment or a pension. They waive it for a minimum balance. They waive it for account holders over a certain age, and many banks have a senior account that does not carry the fee at all. And a great many of them will waive it because a long-standing customer picked up the telephone and asked. Nobody at that bank is doing anything wrong by charging it. It is disclosed. It is in the agreement you signed. This is not a scandal. It is simply a charge that exists until somebody objects. And the bank has no reason on earth to call you and suggest that you object. So here is the exact call, and it takes about 4 minutes. Call the number on the back of your card. Ask 2 questions. Can you waive my monthly maintenance fee? And do you offer an account with no monthly fee for customers with direct deposit or for customers over a certain age? Ask both. The second question matters more than the first because a waiver can be reversed later and a different account type is permanent. And if the answer is no on both, that tells you something too, because credit unions exist. A credit union is owned by its members rather than by shareholders, which changes the entire incentive around fees, and a great many of them offer accounts with no monthly charge at all and a person who will sit down with you. Number 2, and it lives in the same building, but it is a much bigger number, the overdraft fee. The traditional overdraft charge in this country has been around $35. Not $35 a month, $35 per transaction. And the way these have historically worked, a person who was short by a few dollars for a single day could trigger several of them before the deposit landed and end up owing $100 or more for being briefly short by less than the price of dinner. That practice has come under enormous pressure in recent years. A great many banks have reduced these fees substantially, some have eliminated them entirely, and most now offer a grace period, a small buffer amount, or a free transfer from a linked savings account instead. But here is the pattern that runs through this entire video. Those improvements are frequently available rather than automatic. They exist as options, and options belong to whoever asks for them. So the second part of that same phone call is this. Ask what your bank's overdraft policy currently is, whether there is a grace period or a buffer amount, and whether you can link a savings account so that a shortfall pulls from your own money instead of triggering a charge. And ask one more thing, which is the single most valuable request in this section. If you have been charged an overdraft fee in the past year, ask them to refund it. Banks refund these constantly for customers who ask, particularly customers with a long history and no pattern of it. It is a retention decision, not a legal one. The worst outcome is that they say no, and you are exactly where you started. Let me tell you about Dwight. Dwight is 76. He worked in a tool and die shop for 34 years, and he has banked at the same institution since the 1980s, back when it had a different name and a branch on the square downtown. He pays a monthly maintenance fee. He has paid it for as long as he can remember. His Social Security lands in that account on the same Wednesday every month, which at most banks in this country is by itself enough to waive that fee. He has never asked, not because he could not, and not because he did not know how to use a telephone. He has never asked because it did not occur to him that a fee printed on a statement was a thing a person could question. That generation was raised to understand a bill as a fact. Somebody sends you a number, you pay the number. Arguing about it would feel like making a fuss, and making a fuss over $15 would feel undignified. So he has paid it for years. And I want to put an actual figure on that, because $15 a month sounds like nothing, and it is not nothing. $15 a month over the roughly 22 years since that account started charging it is close to $4,000. That is a used car. That is a furnace. That is more than most people spend on a funeral. $4,000 moved from a retired tool and die maker to a bank over a question he never asked because asking felt rude. Now, I want to stop here because Dwight is exactly why I built the thing I am about to tell you about. He does not need a lawyer or an advocate or anybody to fight on his behalf. He needs one sentence from one person telling him that the fee on line 4 of his statement is optional and that asking is normal and that thousands of people do it every day without anybody thinking less of them. That is what the quiet rules is. Plain English, written large, on the things that quietly decide what your money does, with the actual words to say when you call, so that a person who has never questioned a bill in his life knows exactly how the sentence begins. You can find it at kevinexplains.shop. The link is in the description below and in the pinned comment at the top. And if you are watching this on a television right now, there is a code on the screen you can point your phone camera at. 7-day guarantee, always. If it does not hand you something you did not have before, you send it back. So here's a question worth sitting with. When was the last time you looked at the fee line on your own bank statement? Number 3, and this one moves us into category 1, the genuinely illegal, and it is the one that surprises people the most, the notary fee. Notarization comes up constantly in retirement, a power of attorney, a deed, a healthcare directive, a beneficiary form. Practically every document that protects you or your family requires somebody to watch you sign it and stamp it. Here is what almost nobody knows. Notary fees are capped by state law, and in most states the cap is remarkably low. In many places it is a matter of a few dollars per signature. Some states set it at $2, some at $5, some at $10 or $15. The specific number varies, but the principle does not. Charging you more than your state's maximum is not merely rude. In most states, it is a violation of the law that governs notaries, and it can put that notary's commission at risk. So when a storefront quotes you $25 a signature on a stack of estate documents, that may be well beyond what your state permits. And most people pay it because it never occurs to them that a price can be illegal. And here is the better half of this, which is that you very likely never need to pay anything at all. Most banks and credit unions provide notary service free to their own account holders. That is a standard courtesy at an enormous number of institutions. Many public libraries offer it. Many insurance agents are commissioned notaries. A great many people have access to free notarization in 3 different places within a few miles of their house and have never once asked. So the step is, 1 call to your own bank. Do you have a notary on staff, and is it free for account holders? In most cases, the answer is yes, and you never pay that fee again for the rest of your life. And if you are doing a full set of estate documents, which for most people means several signatures across several documents, that single question can be worth well over $100 in one afternoon. Number 4, and this is the one I told you to stay for because it is the largest single dollar amount on this list and because there is a specific phrase that changes the outcome. Surprise medical bills. Here is what used to happen constantly, and I suspect some of you have lived it. You go to a hospital that is in your network. You checked. You did the responsible thing. But inside that hospital, an individual provider who treats you, an anesthesiologist, a radiologist, an emergency physician, an assistant surgeon, turns out not to be in your network. You did not choose that person. You could not have chosen that person. In an emergency, you were not conscious for part of it. And then a bill arrives for the difference between what your insurance paid and what that provider charges. That practice is called balance billing, and for decades, it was one of the most common ways ordinary people ended up with medical debt they could not have avoided by any amount of care or planning. There is now a federal law against it. It is called the No Surprises Act, and it has been in effect since the beginning of 2022. In the situations it covers, and I want to be precise about which those are, you cannot be balance billed. You are responsible only for what you would have owed in network. Your normal copay, your normal coinsurance, your normal deductible. Nothing more. The situations it covers are these: emergency services at any facility in or out of network. Services from an out-of-network provider at an in-network facility, which is the anesthesiologist scenario. And air ambulance services, which is a category that has bankrupted people. It does not cover everything. Ground ambulance is a notable and frustrating gap that was left out of the law. And there are circumstances where a provider can ask you to sign a form giving up these protections, which is a piece of paper you should read extremely carefully and generally decline. So here is exactly what to do, and this is the part worth writing down. If a bill arrives that looks like this, do not pay it. Do not pay it out of fear and sort it out later, because getting money back is a completely different exercise from never sending it. Call the billing office and say these words: I believe this bill is subject to the No Surprises Act. That sentence changes the conversation immediately because the person on the other end knows exactly what it means and knows there is a federal complaint process attached to it. A great many of these bills are simply withdrawn at that point. And if they will not resolve it, there is a federal dispute process. There is a government helpline and an online complaint system specifically for this law, and using it costs nothing. That one phrase has erased bills in the thousands of dollars for people who were one afternoon away from paying money they did not owe. And I want to add 2 things that make this genuinely usable, because a law only helps you if you can recognize the moment it applies. The first is how to spot one of these bills, because they do not arrive labeled. What you are looking for is a bill from a provider you do not remember choosing, arriving separately from the hospital's own bill, weeks after everything else has settled. If the hospital was in network, and this particular name was not, and you never selected that person, that is the exact shape the law was written for. The second thing is timing. Do not wait. These bills get sold to collection agencies, and once that happens, you are dealing with a company that did not treat you and has no obligation to know anything about the circumstances. Everything gets harder at that point. The window where a single phone call resolves it is early, and it closes. And one more caution that I do not want anybody to miss. Somewhere in the paperwork you sign before a procedure, there can be a form asking you to consent to receive out-of-network care and to waive these protections. It is a real document with a real legal effect. Read anything you are asked to sign at a registration desk and understand that you are generally permitted to decline that particular one and still receive care. Number 5, the prescription overpayment. For years, a senior with a serious condition could face genuinely unlimited costs at the pharmacy counter. There was no ceiling. People with cancer, with autoimmune conditions, with specialty medications were paying many thousands of dollars a year, and the coverage structure had a gap in it that pushed a lot of that cost directly onto the patient. That changed. Under the Inflation Reduction Act, there is now a hard annual cap on what you pay out of pocket for covered Part D prescriptions. In 2025, that cap was $2,000. For this year, it is $2,100 because it adjusts with inflation. Once your out-of-pocket spending on covered drugs reaches that figure, you pay nothing further for covered medications for the rest of the calendar year. Your plan covers 100%. The coverage gap that people called the donut hole is gone entirely. The benefit now has 3 phases instead of 4. Now let me be precise about what counts, because this is where confusion costs people. What counts toward the cap is what you actually pay for covered drugs. Your deductible, your copays, your coinsurance. What does not count is your monthly premium, and what does not count is anything you spend on a drug your plan does not cover. That second exclusion matters enormously. If you are paying out of pocket for a medication that is not on your plan's list, that spending is not moving you toward the cap at all. And that is a conversation to have with your plan or your doctor about whether there is a covered alternative. So here is your step, and it is 1 phone call. Call your Part D plan and ask them to tell you your current out-of-pocket total for the year and how much remains before you reach the cap. They are required to track that figure. It is also on the statement they send you every month, which is a document a great many people file away without reading. And if you are deep into the year and you know you have spent more than that cap on covered medications, and the pharmacy is still charging you significant amounts, that is not something to accept quietly. Call the plan and ask them to confirm your out-of-pocket maximum has been applied correctly. There is also a program worth knowing about that solves a different problem. A lot of people hit expensive prescriptions in January and February and simply cannot produce that much money in 2 months, even knowing they will be covered later in the year. There is now an option to spread your out-of-pocket drug costs across monthly installments over the year instead of paying it all at once at the counter. If cash flow is the obstacle rather than the total, ask your plan about that specifically. And there is a second thing happening this year that belongs in the same conversation, because it is real money and it started quietly. For the first time, negotiated prices on a group of widely used medications took effect. These are drugs an enormous number of people in this audience take. Blood thinners, diabetes medications, common cardiac drugs. The prices on those were negotiated directly, and the new prices are in force now, which means 2 things worth acting on. If you take one of these, your cost may already be lower than it was last year, and you should confirm that rather than assume. And separately, if you have been rationing a medication, splitting pills, or skipping doses because of cost, the arithmetic on your specific drug may have changed materially since the last time you looked at it. That is a conversation with your pharmacist, and pharmacists are one of the most underused resources in this entire subject. They can see your plan's pricing, they know which alternatives are covered, and speaking with one costs nothing at all. Let me tell you about Roberta. Roberta is 71. She takes a medication for a chronic condition that costs more than most people's car payments, and she has organized her entire year around it. Her heaviest spending is in the first few months, and then it eases, and she has always understood that as simply how her year goes. She hit the annual cap in April. She kept paying at the counter through May and part of June because the amounts coming up on the register looked like normal amounts, and she had no reason to question them, and because she has never once in her life read the monthly statement her plan sends her. It was eventually corrected. Those things generally are once somebody raises them. But she spent 2 months of a fixed income on medication that should have cost her nothing, and the document telling her so had been arriving in her mailbox the entire time. That is exactly the gap the guide exists to close. Not to make you an expert on Medicare, to make sure the statement that arrives every month is a thing you know how to read in 90 seconds instead of a thing you file unopened. Same place, kevinexplains.shop, link in the description, pinned comment at the top, and the code on your screen if you are watching this on the television. 7-day guarantee, no questions, no argument. A woman handing over a card at a pharmacy counter in May for a total that should have read 0. Number 6, and this one is category 3, the kind you agreed to without knowing. Subscriptions and automatic renewals. Think about what is attached to your card right now. A streaming service you stopped watching 2 years ago. A free trial that quietly became a paid plan. A magazine. An app somebody installed on your phone for you. An extended warranty. A membership that renews annually at a higher price than the year before, with a notice sent by email to an address you do not check. These are engineered, easy to start, difficult to stop, and specifically designed to survive being forgotten. There has been real regulatory movement here. A federal rule requiring cancellation to be as simple as sign up was written, challenged in court, and struck down before it took effect. So the federal picture is unsettled, but a number of states have their own automatic renewal laws requiring clear disclosure, advance notice before a renewal, and a straightforward way to cancel. And separately from all of that, you have a right that does not depend on any of it, which is the ability to dispute a charge with your own bank or card issuer. That last point is the one people underuse. If a company charged you after a trial you did not knowingly agree to, or made cancellation effectively impossible, you can dispute that charge directly with your card issuer. You do not need the company's permission or cooperation. Now here is the exercise, and it is the most immediately satisfying thing in this entire video. Pull up your last 3 months of bank and card statements, on paper if that is easier. Go down every line with a pen and circle every charge that repeats. Then for each circled item, ask 2 questions. Do I still use this? And did I ever knowingly agree to this price? Cancel everything that fails either question. People routinely find $60, $80, over $100 a month walking out the door for things they had completely forgotten existed. A bundled service, a gym membership from before a surgery 2 years ago, software that came with a computer, a subscription somebody set up for a spouse who has died and that has renewed every year since. And I want to name that last one specifically because it is more common than anybody expects. When somebody dies, their recurring charges do not stop. They continue against whatever account they were attached to, sometimes for years, and the surviving spouse has no idea what half of them even are. If you are helping an older parent with their finances, this exercise is one of the kindest hours you can spend on their behalf. And I want to give you 3 specific places to look, because the recurring charges people find are almost never the ones they expected. The first is anything attached to a phone. Applications renew, storage plans renew. A great many people are paying monthly for cloud storage they have never knowingly used, on a phone somebody in the family set up for them, and the charge appears on a statement with a name that means nothing. The second is anything that arrived as a bundle. Internet packages that include services you never asked for. Alarm monitoring that continues after equipment has stopped working. Roadside assistance that duplicates something already included with your car insurance, which is one of the most common overlaps there is. The third is anything connected to a device you no longer own. A subscription tied to a car you sold. A plan attached to a tablet that broke 2 years ago. Those do not cancel themselves when the object disappears. And when you do cancel, get confirmation in writing. An email, a confirmation number, a screenshot. Cancellations that were performed only over the telephone have a way of not having happened, and the confirmation is what ends the argument 3 months later. Number 7, and this is the biggest one in pure dollars for a lot of you, and it is the one hiding on a form you sign every single year. State income tax on retirement income you may not actually owe. Here is what most people never check. The large majority of states, 41 of them, do not tax Social Security benefits at all. And beyond Social Security, a great many states offer substantial exclusions on other retirement income. Pension payments, withdrawals from retirement accounts, annuity income. Some states exclude a fixed dollar amount for filers over a certain age. Some exclude qualifying retirement income entirely. Some have credits that function the same way. The rules differ enormously state to state, and several states are considerably more generous than people realize. Now here is why this one bothers me more than the others. This is not a fee somebody charges you. It is a benefit you are entitled to that simply does not get applied, and the person most likely to miss it is the person least able to absorb it. Consider who is affected. Somebody with a straightforward return, modest pension, Social Security, maybe a small withdrawal from a retirement account. They either file it themselves using software, or they hand it to a preparer working through a stack of returns during the busiest 10 weeks of that person's year. And a senior exclusion is a line that has to be identified and filled in correctly. If it is missed, nothing goes wrong. No letter arrives, nobody flags it. The return is accepted and processed, and the person simply paid more than they owed, quietly, and will do the same thing again next year and every year after. So here is the step, and it is one sentence spoken out loud. When your state return is prepared, before you sign it, ask directly, was my state's retirement income exclusion for seniors applied to this return, and is any of my Social Security being taxed at the state level? Ask it out loud. Make somebody answer it. If you prepare your own, find that section in the software specifically, rather than trusting it caught your age. And if you find out it was missed, Most states allow you to amend a return going back a few years. That is a real refund of money you already paid, not a future saving. And I want to add one more thing about this that catches people who have moved, because it is a genuinely common and expensive mistake. Your state tax treatment follows where you actually live, not where you worked, not where your pension was earned, and not where your former employer is headquartered. There is a persistent belief that the state you earned a pension in has some claim on it after you leave, and for the overwhelming majority of people that is simply not true. Federal law generally prevents a state from taxing the retirement income of somebody who no longer lives there. So if you retired and moved, and you have been filing something in your old state out of habit or out of caution, that is worth an actual conversation with somebody who prepares returns, because it can be several years of unnecessary filing and sometimes unnecessary tax. And the reverse matters too. If you spend part of the year in one state and part in another, which describes a great many people in this audience, which state considers you a resident is a question with real dollars attached and specific rules about days and intent. That is not something to guess at, and it is not something a piece of software will ask you about clearly. Now let me put the arithmetic together, because I think people underestimate this by an enormous margin. Every single item on this list is recurring. That is the whole point, and it is what makes them different from a one-time loss. A maintenance fee you cancel this month is a fee you do not pay next month, or the month after, or in 11 years. A subscription you cut is gone permanently. A state exclusion you finally claim applies again next year, and the year after that. A prescription cap you enforce applies every year for the rest of your life. So take a modest version of this. Say you find $15 in bank fees, $40 in subscriptions you had forgotten, and a couple hundred a year from a state exclusion nobody applied. That is not a large haul by the standards of these videos. That is roughly $900 a year. Over a 20-year retirement, ignoring everything else, that is $18,000. And that is before a single surprise medical bill gets withdrawn, which by itself can be a larger number than everything else on the list combined. Now, a serious warning, and I want to be emphatic about it, because wherever there is money owed back to older people, somebody appears to take a percentage of it. Every single thing in this video is free to do yourself. You never pay a company a fee or a percentage to have a bank charge waived, to dispute a medical bill, to cancel a subscription, or to claim a tax exclusion. The phone calls are free, the forms are free, the federal complaint processes are free. If you get a call or see an advertisement from somebody offering to recover money owed to you for a share of it, hang up. They are going to perform the exact steps I just described and keep part of what is yours. And I want to describe what those operations actually look like, because they have gotten sophisticated, and they do not announce themselves as scams. They present as advocates, senior advocacy services, benefit recovery specialists, medical bill negotiators. Some of them use official-sounding names that sound governmental without quite claiming to be. And the pitch is always the same shape, which is that the process is complicated, that you would struggle with it, and that they will handle it for a percentage of whatever they recover. The percentage is frequently substantial. A third is common. Half is not unheard of. And here is what you are actually buying. A phone call you could make yourself, to a number that is publicly listed, using a sentence I gave you earlier in this video. Now, I want to be fair, because there are legitimate professionals in adjacent territory. A medical billing advocate handling a genuinely complex case with multiple providers and an insurer in dispute is doing real work. A tax professional identifying an exclusion across several years of amended returns is doing real work. Those people generally charge a fee for their time rather than a slice of your money, and that distinction is the tell. Somebody who wants a percentage is telling you they think the money is easy to get. If it is easy to get, you can get it. And if your own situation is genuinely tangled, if you are looking at a stack of medical bills and cannot tell which ones are covered by the law I described, email me. The address is on your screen and in the description below. I read every one. Now let me give you my honest opinion, and it is only that. I do not think most of these are the product of anybody scheming against you. Most of them are just what happens when a system has no obligation to volunteer information. But I want to name the pattern, because once you see it, you will see it everywhere. Every single item in this video runs in the same direction. The default costs you money, and the correction requires effort. Not one of them defaults in your favor with an opt-out. Not one. Your bank charges by default and waives on request. Your prescription plan applies the cap correctly, usually, but you are the one who has to check. The tax exclusion exists but must be claimed. The subscription renews unless canceled. The medical bill arrives unless challenged. If even a few of these defaulted the other way, if the fee were waived automatically for anybody with a direct deposit and reinstated only on request, most of this video would not need to exist. That is not fraud. Nobody is lying to you. But it is a system in which passivity is expensive, and the cost of passivity falls hardest on the people who were raised to believe that a bill is a fact, and questioning one is impolite. Which brings me to the thing I most want to say, and it is aimed squarely at some of you. Asking is not making a fuss. Asking is the intended mechanism. The waiver exists because it is meant to be requested. The exclusion exists because it is meant to be claimed. The law exists because it is meant to be invoked. You are not getting away with something, and you are not being difficult. You are operating the system the way it was built to be operated. And I want to give you something practical for the actual moment, because knowing you are allowed to ask and being able to say the words are two different skills. You do not need to be forceful, and you do not need to argue. The most effective sentence in every one of these calls is short, calm, and slightly boring. I have been a customer for a long time, and I would like this fee waived. I believe this bill is subject to the No Surprises Act. I would like you to confirm my out-of-pocket maximum has been applied. Then stop talking. That last part is the technique. Say the sentence and then wait. Most people, feeling awkward, immediately soften it, apologize for asking, or start explaining why they probably do not qualify. And every one of those gives the person on the other end an easy way to say no. The silence after a clear request is not rudeness. It is just space for an answer. And if the answer is no, ask one follow-up question. Is there anybody else who can approve that? A great many of these decisions sit one level above the person who first picks up, and that single question moves you there without any unpleasantness at all. All right, here is your checklist. 7 things, all free, and most of them are one phone call. 1. Call your bank. Ask them to waive the monthly maintenance fee. Ask whether there is a no-fee account for direct deposit or for seniors. Ask about the overdraft policy, and ask them to refund any overdraft fee from the past year. 2. On that same call, ask whether they have a notary and whether it is free for account holders. 3. If you have a medical bill from an emergency or from an out-of-network provider at an in-network hospital, call the billing office and say you believe it is subject to the No Surprises Act. 4. Call your Part D plan and ask what your out-of-pocket total for the year is and how far you are from the cap. 5. Pull 3 months of statements and circle every recurring charge. Cancel what you do not use. Dispute what you never agreed to. 6. When your state taxes are prepared, ask out loud whether the senior retirement income exclusion was applied and whether any Social Security is being taxed at the state level. 7. Never pay anybody a percentage to do any of the above. Let me leave you with this. Dwight has paid a fee for years that his own bank would have removed the first time he asked because he was raised to treat a printed number as a fact rather than an opening position. Roberta paid for 2 months of medication that should have cost her nothing, and the document proving it was arriving in her mailbox the entire time. Neither of them was foolish. Neither was careless with money. Both of them were exactly the kind of person who pays every bill on time and never causes anybody any trouble. And that is the profile this entire system is built around. Not the person who argues, the person who does not. So go make the calls. It is one afternoon, it costs nothing, and every dollar you stop paying this month is a dollar you stop paying every month for the rest of your life. I am Kevin. Thanks for watching. Do not forget to check the quiet rules at kevinexplains.shop.